Good Monday morning. Any of the mothers that are out there listening to this, I hope you had a wonderful and happy Mother's Day. And for all you guys, I hope you did something nice for your mother. Sorry. In my case, my mother's been gone for a while, but they're never really gone too far because all you have to do is look up. So they're pretty unique creatures. I think we all learn that, especially as we get older. So anyway, moving forward, let's talk about what the markets are gonna do, what they're doing, and the topic of this video is there's a distribution or a declaration of a distribution in three Yieldmax funds. The Fund of Funds, the Magnificent Seven, and ULTY. So all three are kind of unique. Obviously, the Fund of Funds is the Magnificent Seven. For those of you that know what it is, I'll go over it when I talk about it. And then the Fund of Funds is really all of the Yieldmax single stock funds, right? So they own all of those. And as they've been on board a month or two, like YBIT is new, they haven't done a distribution. So Misty is in there now. Misty had a $4 payout, now had a $2.52 payout. So one of the best ways to really figure out what these distributions are, at least on YMAG and YMAX, is to go out and look at what they hold, right? So as I said, the easy part with YMAG is really all about the Magnificent Seven, right? So they own AMZ for Amazon, Apply for Apple, FBY for Meta, Facebook, GUI for Google, MSO, FFO for Microsoft, NVIDIA for NVIDIA, and Tesla for Tesla. So what we can do is see a weighting there. We see the total number of shares outstanding, and then that gives us an idea if we go back and look at the individual stocks, which I have in all my list, right? So let's go to YMAG. So this is my summary sheet, so we'll come back to it, but let's take a look at what all we have in here. So this, whoops, oh, I'm not in the right sheet. Let me get there. Okay, now this stuff will move. So this is my YMAG summary, right? So the seven stocks in here, here's YMAG itself, right? What was its distribution in February, March, and April? And what will it be in May? So these funds are younger, right? They're not as old as the Tesla's, the single stock funds, and the ARC Innovation and some of the ones. They're newer. So this will be the fourth distribution. And I took a look at their percentage of YMAG. What kind of shares did that represent based on their percentage, knowing how many shares that YMAG holds. And then I sort of also looked at what's the average of all months of these funds, right? So if Tesla's been around for a long time, 17 payments, what's their average monthly payout? It's $1.31. NVIDIA's is $1.13. Now Tesla had an inverse split. So a lot of the payments that were 70 cents and 80 cents moved up to $1.50, $1.60 because someone has more shares. So when I look at that, I still use what is the current distribution in May, right? So Tesla paid 69 cents in May, 69.42. You figure out what kind of payment based on how many shares that YMAG holds, and it adds up to what you can see for the payout. Now, Yieldmax decide to pay more or less? That's always the million-dollar question, right? You can see here they were trending up, but also the players were trending up, right? The NASDAQ, the AI focus, a lot of these big stocks did pretty well at different times. I'd say Apple's the only one. Apple didn't do so well, right? Everybody else, well, Tesla was hurting until recently. It got a bounce on Elon, some news. So anyway, I don't have this doing a whole lot better. My calculations show it coming up to maybe 63, 64 cents. The best thing you can really do is see how many shares. Now, I experience this a lot in reporting on Misty, right? Because when they make a declaration, people can pile in that day, and especially since that was a newer fund, I mean, it probably had 20% shares bought in. Well, I don't expect that 20% shares when this stock already has a lot of shares, right? But I do think that more shares could come in here and drag the 64 cents down to 63 or 62 cents. But it's not like you're going to get a surge that you could get in a brand new stock, right? And even today, when Misty goes on sale, it hasn't been doing so well, although it's turned around now, and I'm actually projecting early. It's sort of a joke because it's so early from the next declaration on June 5th. But I'm saying, how can it get to a $4 payout? Well, if it continues what it's been doing over the last 10 days, it could get to a $4 payout because it's high IV and simply just staying neutral to slightly up. And I think we're due for a rebound in BTC, which should drag Mr. up a little bit. So anyway, we can talk about that. That's why I don't see a big impact. But if I do see much of an impact, I'll do a revision or I'll talk about it. So let's look at YMAX. And a lot of people see YMAX as the safest fund. I mean, I would agree. It's certainly got a lot of companies in it. 20, I think, to be exact, when I counted them. So when I go through in here and I look, I say, okay, who are the big players, right? Who's going to have the big payment? So I built a table, and I can sort it from smallest. Who's contributing the least, right, for the payout in YMAX? Well, that's ExxonMobil, right? Although I own a big oil company and I get about 18%. And this year we're going to have another special dividend. So at one point they were selling off some assets and it was contributing about 49%. And it's not even doing synthetics. Additionally, I would sell some calls and sell some puts against my positions to make some extra money, because the stock didn't move a lot, but it did pay very well. So, ExxonMobil just doesn't pay out that much, and thus it doesn't have that much volatility. So anyway, you can switch these around. I like looking largest to smallest, right? I can sort it on any column, right? Share price, market value. So you can see that Coney should be the largest contributor based on its share count. And Misty will certainly be up there, having paid a $2.52 dividend distribution, I guess we call it, at Yieldmax. So altogether, if you look at the May distributions that they hold, they equated to $17.02.5, which gives you this many million, right, across the share payments. So the challenge is to take the current share count, where this changes daily, right? So this is 6,550,000. So when you do a divide, you get, high 79s rounded to 80. So the only thing that can happen here is a percent, a 2%, 3%. I don't think it would be a 5%. This thing's probably good for 78 to 80 cents. So it's on an upward trajectory. So again, being a lot safer bet because you own all the Yieldmax funds, right? You own some fairly stable ones. You own some wild ones. You know, there's a lot of good payers in here. Look at May. Let's sort this thing by largest to smallest, right? So here's our pay structure just individually for May. So Misty had the highest, Coney had the second, NVIDIA had the third, Square, AMZ, Netflix, Murny, PayPal, Facebook Meta. Oh, Disney, that's interesting. Tesla, they bounced some. GUI, they had great earnings. Microsoft. So anyway, it's really cool to put a table in your Excel files and then produce some pivot tables and so forth. But anyway, I won't belabor you. I want to make this fairly quick and get to the market open here before long. So what I did for ULTY, and you have to understand that ULTY doesn't really use synthetics. It's no special trick. It tends to do covered calls, and by design, they go out and buy a variety of stocks. I've listed some industries. I knew probably 70% of these, but some I had to really look up. So what it does is then write covered calls. But just looking, this obviously was a weekend holding, right? So the other thing I've noticed when I track ULTY is their target is 30 to 40, and I think I counted 20. And they've changed a lot. I'll bet they've changed out 40% of all the companies they've bought or held. Now, the only two Yieldmax single stock funds that are represented are Coinbase and MicroStrategy, right? So I made a note of those, and I said 20 individual stocks, all high IV focused. I didn't bother to print out or put in here all the high IVs, but please know they're high IVs. They probably range from a low of 70 up to 150, right? So there's some really high. All you got to do is look at your favorite meme stock. I didn't even bother to say what it does. I think everybody knows it's a meme stock, and they were actually a gaming store and then tried to develop some software. I haven't really kept up with it. I never traded it. It was just too crazy. I always felt like, you talk about a Ponzi scheme, I felt like the people that got in early and read it promoted the hell out of it, and all the people that got in later lost their ass. So anyway, so you got companies like Affirm in the financial. I was fine. There's a couple insurance companies, a design agency, a global beverage company, Pod or Weed, BTC Mining. There's a couple of those with Marathon and CleanSpark. You got a crypto exchange, there's an insurance company, big tech for large parcel retailers, therapy for mental health. There's also MicroStrategy, right? Crypto owner and business strategy software for crypto companies. Sunrun, solar panel. Super Micro just blown up from NVIDIA. The guy that owns that brother has a huge factory over in Taiwan, so they bring all the semiconductor chips and processors and basically assemble them right there in Silicon Valley in a custom way for all the big AI players. So they feed Google, they feed Microsoft, they feed NVIDIA. So you talk about a company that's gone up, it's probably been one of the highest performing companies, but I sure wouldn't want to own it right now. It's a bit like NVIDIA. You know, I think NVIDIA, when the air comes out of that, I think that stock could drop tremendously, 40% or 50% from where it's at. Now, long run, is it a fabulous company with AI and everything? But yeah, it's just, there's too much FOMO, it's overheated. you know, the market's bouncing back right now. Maybe it'll hang in for a few months going toward the elections, but I sure wouldn't want to sit on it and own it, because when competition comes in, which they inevitably do, you see it in Tesla, right? And when the markets turn down, it can get ugly. But you talk about a company that had an high IV and, you know, was up 13, 16 times. I don't know, what was Tesla up from 2018 to 2021 or something? It probably was up 40 times. So, you know, when stocks go up like that, you just, when they come down, you know, a 50% retrace is not uncommon, and still be bullish longer term. I think Tesla is going to end up doing fine in time. Okay, so I don't need to give you my opinion on stocks, but I don't own ULTY. I would find it difficult to report on it every day in that kind of detail. But I think it's an interesting and challenging job, and so with that high IV, it can produce money. So let's go back to my first sheet. So how do I see this? Well, I see YMAG, that's not any great prediction, doing what it did last month, maybe a penny or two more. But look at the yield on that. I mean, that's 37%, almost 37, almost 38, I should say, percent yield. If you got that, you know, Warren Buffett would be happy with that. I mean, you can do a lot with that kind of yield. By the way, the rule of 72 says you double your money in 2 years, getting that kind of a yield, right? So this is a 47% yield, and this one feels safer to me. You know, I'm not so sure. Even though those are big companies, they're certainly not going to go away. We'd have to have a 29 crash, which I don't see coming, and drop 80% in order to, you know, have these companies drop. I just don't see that happening. ULTY, I'm shooting for a 95% target. I think in order to keep this fund active, they need to keep the payouts decently high. It paid $1.06. It jumped up to $1.41. Some of the particulars in there have come down and taken a hit, but some are moving up. So I think you split the difference there. The 106 and 141 is like 148, and I come in around 123, and that's a 96% annualized yield. It might be slightly higher than the average yield on all of them, but it's not far from the target. So I'd be surprised if, and the reason, you know, the funds come down some, just look at the price, right? These are still near their launch prices, right? Since everything launches at 20. This has been beat up, right? And it still paid $1.06, and then it still paid $1.41, right? So I think it's in the dollar. Could it be down to $1.10? Sure. Could it be $1.30? Yeah. You know, this one's probably the least educated of all of those, right? Whereas I don't think we'll be too far off here. This is what the numbers tell us, but it doesn't mean that the fund managers pay that. And I just took a guess saying they want to keep this one popular. Okay, this is Bruce signing out. Again, this is not financial advice. I'm not a financial advisor. This is for fun and education. Have a great week ahead and a great rest of your day. Okay, bye for now.